What's up, everyone? Welcome to another episode of Global Cap FX. Man, it has been a crazy, crazy last couple of weeks. The interest rates and inflation are playing a major role in how the economy is moving right now. And in this episode, we're going to be going over a couple of pairs, predominantly United States based. And let's not waste any time. Let's get right into it. All right, so the first pair that we're going to be looking at tonight, is going to be USD Canadian. Now, before we get into that, for those of you who know, I like to start off in the larger time frames and then work my way down. First thing we'd like to do is locate any kinds of, if we're looking for a short, you know, we're looking for supply zones. If you're looking at a buy situation, if your bias is buy, then obviously we're looking for a demand zone. I like to look for areas like that, things like price action movement that took place in the past where financial institutions made their pushes. And let's go ahead and take a look here at USD CAD on the weekly, shall we? All right, so looking at this general area, this sideways movement right here, there was there was a bit of a range. And as you can see here from this blue candle all the way across, there was some issues breaking below this liquidity zone. You see spikes, 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 spikes to the downside, trouble breaking through. Then finally, you have your impulsive candle pushing out of that zone with no real corrections of any sort. The candle following that didn't have any kind of any strong wicks on the top side of its body. And what that tells me is that there's no real correction that took place quite yet in this area. Now, when it comes to, let's say we're looking at overall short, okay? I like to look for areas where price ultimately needs to retest or fill in, aka mitigate, before continuing into its true direction. Now, mitigation is ultimately banks and financial institutions coming back to an area like this where there are no wicks and ultimately creating liquidation in that area. Okay. They're taking out people's stop losses in these areas, and they're also breaking even on their buy positions that they had. Because when trades take place in the big money, right, they're putting sells and they're doing buys at the same time. The reason why they do that is because they're looking to fake out the retail traders. Okay. Now, when they look to come back up and retest, that's what we call mitigation. Okay. Mitigation is ultimately when price comes back into a certain area, creates a retest in a zone where there were no wicks, and then turns around into its true direction. Other times, it'll come into a supply zone, such as this area right here. It'll hover around for a little bit, create some type of a setup, whether it's a double top or lower highs, impulsive candles, etc., etc. Okay, so looking at it right now, fast forwarding to the present, you can see here we're already we're only into Monday, and it is already pushed back into this blue candle that initially broke out of this demand zone right here. It has already filled over 75% of this candle. Now, if we were to go down into the daily time frame, we still have about 18 hours left before this daily candle closes. Let's keep moving down further into time frame. This three candle setup, this could be something of interest here. Overall, these two candles took back up space from this black candle that impulsed to the upside. Going down to the 1 hour now. Okay. There was no real opportunity for for entry. If we're looking for any kind of break and retest so far in the 4 hour or the hourly, I have not seen anything really, really attractive for me to get into. Okay, let's go down to the 15 minute. All right, now if we're going to get really granular, okay, this move right here was probably a good opportunity to get in. Price pushed to the downside and then ultimately hovered back up into this zone where price initially pushed to the downside right here around 137, 400, and then it proceeded to the downside. Now, one thing that I will be paying attention to is this zone right here where price made its initial push to the upside here. Uh, this is a psychological area as well of 136,500. So we'll be paying attention to this general area. Maybe price will come back to the upside, do some type of a retest, maybe even mitigate some more of this zone here between these two horizontal lines and come up a little bit higher and then liquidate any stops that were set above this zone right here. But what we want to do is ultimately what we want to do is look for retests, right? So this general zone right here, you could call that a range. And then you had this candle right here that symbolized an impulsive move out of that range. So if we really want to look for a short here, we would look for it to come back into this general area and then give us some type of a confirmation, whether it's an engulfing candlestick, something like some market exhaustion, like these wicks here on the top side of the bodies of the candle. And then if we were to get into a trade here, we would put our stop loss above the high and then look for at least a 2 to 1, 3 to 1 risk to reward ratio on the downside. Okay, so I'm looking for that going into the rest of this week. Gold, we made some money on that last week. Very proud of this move right here. It required a lot of patience. Like when it comes to day trading, a lot of this stuff is, it's 90% mental. Okay, you can do all the technical analysis that you want, but when it's all said and done, if you don't stick to your disciplines, maintain proper risk management, and let the trade play out, the technicals don't matter. So this is a prime example right here. So this line right here, I put this right at the top of the bodies of these candles to symbolize the beginning of the supply zone. And as you can see here, price really had trouble staying above this area, right? So that right there in itself is a solid signal that price is losing strength to go up. Okay. The only time that it really broke above was this black candle right here, but then the next candle immediately rejected that movement and came back below our line. Now, on top of that, you had this impulsive move. Okay. I actually marked that up with a blue box. Okay. I already marked it up. We're going to encapsulate this last candle right here that went up. And then you finally have your impulsive move to the downside. So as you can see, after price pushed down, it really took its time. It took a whole week for it to come all the way across this move here, spike to the top side, creating a retest action with this wick right here. Another confirmation, like I mentioned just a second ago, is that it's having trouble breaking below this. This blue candle was a nice signal for me to say, all right, this could be a good opportunity to get in because it is clear that despite the fact that this bullish candle pushed above here and closed above here, it was immediately rejected. So that gave me a good sign to get in right here. I put my stop loss above this wick right here that symbolized the retest of the initial impulse over here, retest of this impulse. And then I got in and let it ride. Okay. Some of my students caught this trade. So I was really, really, really happy that we located it and stuck to our guns at the end of the day. Okay. So that's what I have so far with the United States, as I mentioned, inflation and interest rate has had a big impact on how things are moving in the market technically, and it's very important to, if you have a certain strategy, whether it's supply and demand, support and resistance, if you're looking for previous price action movements from financial institutions, you look for your multiple confirmations. You set your stop loss in a position where obviously you can avoid that it gets hit. And then most importantly, when you after you do that, you want at least a 2-to-1, 3-to-1 risk to reward ratio. If you can't do that, don't get into the trade. There's no point in, putting yourself in that mental trap of thinking, did I get in the right direction? So if you have proper risk management, you can avoid that mental stress of all of that I just mentioned. Let's take a quick look at GBP AUD real quick. This was a nice trade that I took last week for some, or was it this? Let's see. Was this last week? This is 2 weeks ago. Yeah. Okay. So no trades last week on the Great Britain pairs. I did mark it up to some extent, but I didn't really fool with it. What I see here is price could potentially continue to go down. Aside from interest rates and inflation, the energy crisis that's going on right now is having a big impact on the British pound. And for the first time since I think I heard someone say 1985. I'm not going to act like it was me who discovered that, but it was somebody else who said it. But the first time since 1985 that that the British pound has almost got into parity with the US dollar. Okay, so as you can see here, one British pound is almost exactly one US dollar. The last time that has happened is 1985. So, guys, what I highly suggest, just be patient, stick to your disciplines, and most importantly, have proper risk management so that you can keep that mental straight as you're waiting for your trade to play out. All right, well, I hope that made sense. I will see you on the next video. Make sure to subscribe, leave a comment if you have any questions, and I'll see you on the next one. Peace.